Well, good morning, everyone. Welcome to our Thursday morning trading room. Hang on here a moment. We'll get the screen share going on. All right. So yesterday, very, very quiet after that early rally that we saw. The market really did just spend the whole rest of the session going in a sideways funk, which we thought it might. The market's, we'll take a look here at the daily in a moment, but the market seems to be in that mode right now, really stuck around this whole 7,400 area. We get a little bit above it, we get a little bit below, not really leaving that zone. The European session, a little bit bearish, but not aggressively so. This is the whole of the European session right here, and it looks like it's spanning all of about 40 bars. So we do have a small upside gap, and it does look as though the market might be trying to fill that gap here for starters. This, of course, now on the Eagle trend trader. Let me get that daily chart up here. And so we've been looking at the daily just to kind of give us an overall perspective of what might be going on. And I think it's fairly plain that the market is kind of wedging up a little. We got this kind of thing going on. But a couple of significant things to take a look at. First off, we had some very, very strong rally bars. You know, anytime you see a bar open on the low, close on the high, that is a very, very bullish bar. And likewise, the selling bars here the day before, the market opens at the high, finishes near the close. Yesterday, a big reversal of that, and now the day before, a big reversal, and then yesterday, this tiny, tiny little bar. But what kind of caught my interest looking at this before was the amount of volume associated with these tiny little bars. If you look at the volume histogram here below, you can see these tiny little bars are getting some serious volume going on. And that should not be the case. Normally, tiny little bars lack volume. And the other thing that's kind of interesting to me is that we've breached the trend line. Now, normally you would think a trend line breach like that is pretty bullish, right? No, not usually. Usually a bullish market continues trading within a range, a channel. So a bullish market would look like this. And, you know, there's still a chance that we're going to get up here. It looks like if we kind of eyeball it, 76, maybe 7,700. I don't think that's unreasonable. But like I say, if you kind of draw your trend line off these recent highs, we have a little bit of a breach going on, and that could turn out to be bearish. So as most things trading related, it's not 100% clear what the market might be doing, but I may be a little bit more inclined to be a little bit more bearish, maybe. We'll have to see how things play out. I don't usually like going into the market with some sort of bias. Those tend to be my worst days, where I think the market has to do something, and then, of course, the market doesn't have to do anything. or very often it will do the exact opposite of what I'm anticipating. Which again is very much like trading. And it looks like that's what's going on here this morning. So the market, a little bit bearish through the overnight. Start the day with a trend change signal, a cloud crossover. That's the number one signal. So the clouds crossing, so they're changing from bearish to bullish. They get crossed over, there's a pullback, and then the market tries to resume with trend. This is actually pretty much a textbook version of that signal. The only thing it had going against it for me is that it was only a couple of minutes into the session, but it looks like right now, no problems. As we experience a very aggressive push out of the open. All right, let's just throw that back on the shelf for now. We'll see what they can do with this. Okay, we're getting a few follow-up signals. We'll see, maybe if we come back here with a hard edge bounce, that would be a number 3 signal. That might offer a decent entry opportunity. Good follow through though on a lot of these signals. The Eagle was the only one that didn't really produce a signal. We didn't get a rule of 3 or anything really hinting to a reversal. In fact, when I was looking at the charts before the market opened, I would have bet you dollars to donuts that the market was going to tail off to the short side. We are only 10 minutes into the session though, so Don't want to get too excited. Do something silly. This is usually the time of the day where I hamstring myself with a stupid trade. All right, and here now that counter trend signal, the number 2 signal, this, if it wasn't right here at around quarter to the hour, might have been one that I would have taken advantage of. Why? Well, yes, it's counter trend, but if you take a look at what preceded it, you could also make a case that this signal is actually with trend, with the bigger trend. So it's counter to this last little rally. However, it may be more in sync with the big trend or the emerging trend. And that could make it inviting as well. All right, so we're into the hard edge now, or the first hard edge. This is very often where we see the market make some sort of reaction. Oh, Floyd says I missed a nice rally in crude oil. Crude oil not as volatile as it used to be. Crude used to be just a real go-to day trading market, but not so much anymore. All right, so we've got the number 2 signal. You could treat these follow-up signals as a second push on the number 2 if you wanted to try to get short here. I'm really going to try to avoid doing something silly for the first 15-20 minutes of the day. But that is a very tempting signal. All right, we should see the market come out here and try to recover the trend, in which case we're going to see a number 3 signal. If that number 3 signal fails, if we get that 232 set up, that would make for a more reliable short. That might show us that the sellers are indeed going to try to push the market lower here this morning. All right. So this now, one of these discretionary signals that you hear me mention from time to time. It's a bit of a crapshoot, but things are kind of stacking up. We have a visual 232 going on. So we have the counter trend signal. We have the hard edge bounce, no buy signal printed. The market was not bullish enough to actually produce a buy signal, but then we come back with another number 2. It did encounter the hard edge. It did rally a little bit, so that's why I said visually we sort of have this 232 setup. So I'm going to bring my break even now to the The low of this last bar, if the market happens to come down here, challenge these lows one more time, I will consider looking at a break even. But the bulls have not left the building. That's why I said this is a little bit of a sticky point. Oh, and look at me. I was working so hard not to take a trade at quarter to the hour. And when did I take the trade? Oh yeah, quarter to the hour. Okay. Oh, old habits die hard. If I can see at least one more bearish bar here, say this current bar finish lower, I'm going to manually roll my stops in a little bit. There we go. Let's put it on the other side of 73.99. You could use 7,400. Again, very popular number of late. The best stop, by the way, is still up above the high. All right, it looks like now we are going to get a proper 232. So the counter trend signal, the hard edge bounce, now another counter trend signal. Let's see if this one gives us a little bit more follow through. Oh, all right. Scott says, hey, Eric, I found this cool indicator, notifies you when it's quarter to the hour. That might be handy. Oh, don't you dare bounce. Come on. So we've seen a little bit of a bearish push as the market slipped below this low, but so far, very, very quick recovery on the part of the buyers. Oh, yeah, okay. Scott, it was a late night for me and an early morning. Scott says, indicator warehouse calls at o'clock. Oh, all right. All right. Looks like the ATR stops are following the market pretty well. There are indicators, just to be serious for a moment, there are indicators that will paint background highlights to alert you to certain times of the day. I suppose I could set an alarm clock as well. Yeah, Scott says too early for me too. I need an afternoon nap today, but I don't think I'm going to get it. Got too much stuff going on. right, let's see if we can push back toward the lows of the morning. And this support zone here at 73.79 . If we breach the lows of the morning, we are going to knock down some of those early buyers, those early bulls. There could be a little bit more follow through on this. You know, the traders that are, well, I don't want to say necessarily braver, but they're certainly more risk tolerant than I am. They will still have their stops up here. That is the last verifiable swing. I can't do that. I can't have nearly $400 in open profit just hanging out there, plus another $200 in risk. So $600 in play. Of course, what they're looking for is they're looking for a very strong intraday move. They want to try to ride out the whole move for the whole day. If we go back to our time-based chart, so here again the daily, if I say change this to a 5-minute, and oh, here's a good example. This was the other day. So they would place their initial stops down here, and they're hoping for a day like this. So they would look for these swings where the market actually moves lower, and then moves higher, and then they would roll their stop. Another swing there, then they would roll their stop, and so on. And their objective would be, you know, every time the market dips, when it trades higher, they would roll their stop. But I don't know. For me, it's not feasible to have all that at risk, all that open profit at risk. But you can see when it works, my goodness, it works well. Look at this. You would have been able to hold, I guess, right there, almost into the close, and that would have been your day right there. Now, of course, much easier to do in hindsight. The next day was nearly impossible. So the market opens right about here. Let's say you got short. Your stop is up here. And then you roll and you roll. Well, I guess you wouldn't have done too bad. It still would have been an interesting day, even though most of the day spent sideways after that. You're kind of stuck trying to get in early, though. And right now, we're not doing too bad in that end. The ATR holding me in through the first little hesitation. Thanks, Scott. Scott says, nice trade, E. Every once in a while, right? Okay, getting a little bit of a pushback now from this second support zone. I've pointed this out before. Let's take a look here at the Falcon. It will be a little bit easier to see because we don't have the background highlights in the clouds. With your support and resistance suite, these three lines here, your primary resistance, your median line, and your primary support, kind of set the tone for the day. It doesn't necessarily mean that they're stronger. It's just that they're probably going to be a little bit more popular until the market chooses some sort of direction. If the market breaks down below the primary support, there will be a very strong tendency to move to zones. So this would be zone 1, this would be zone 2. In very strong instances, the market can move 3 zones. And it looks like that might be what we're looking at today. Now, likewise, here on the upside, if the market breaks primary resistance, we're normally looking at moving 2 zones. So you can look at that second line as a really, really ambitious profit objective. And then in very, very strong trending markets, you may even encounter the third zone. But we got our 2 zones out of this, and well, they're thinking about it, but I think we're going to see a little bit of a reaction now that we're down by this support zone. Way to go, Mickey. Mickey bagging 385 on a single contract in the NASDAQ. Well done. Nothing wrong with that. Well, thanks for coming out, folks. I'll see you tomorrow. Bye. People often ask, is it possible to make $100 a day trading? And yeah, it's possible to make $100 trading the first half hour. As you can see, that was a very decent move that we were able to take advantage of. Hey, way to go, Floyd. Floyd picking up 225 on a single NASDAQ contract on that move. Well done, Floyd. All right, now we're in deliberation mode. Honestly, my day would be done now. That was a fairly strong move, and unless something really, really, really enticing shows up, I probably would not take another trade this morning. Now, we're still stay in the trading room, of course, and I will still point out what I believe to be profitable trades. But the point I'm trying to make is so many people come to trading with a production line mentality, right? They think, oh, if I trade more, I'll make more. And no, that's very often not the case. In fact, in my office, I have a sign, nicely framed. It says, "Your job as a trader is to take what the market is giving." And that's your job description right there. If the market ain't given, you ain't taken. And you certainly cannot make the market do anything. That is for certain. All right, the hawk, a little conflicted here at the moment. We're getting some yellow bars cropping up. We've hit a little bit of a sideways skid. The falcon actually trying to get bullish. Look at this. We got ourselves a trend change signal right here, and hot on the heels of that, we have a late filter entry signal. Now, unlike most late filter entry signals, I would consider this definitely to be a counter trend late filter entry. Not sure how I feel about that. The trend is down. If you have difficulty seeing that the trend is down here, go find yourself an 8-year-old and ask them, which way is this going? I think they'll tell you it's probably leaning toward the short side. But there's no doubt we have put on the brakes. So we'll see. Maybe a little bit of a pullback is in order. Here on the Raptor now, we have the hard edge bounce, and we're getting another 232, this time to the long side. I suppose if you were inclined, you could even treat this tiny little range right there as a bracketing opportunity. You could use your OCO order. You could look to buy a break above. You could look to sell a break below. Why those two? Well, we have a second push opportunity now on a number 3 signal and a second push opportunity on a number 2 signal. How would you do this? Well, you engage your OCO, so you click on that, and you don't use this part down here. To do your OCO orders, you're going to right click on your chart and select your order. And likewise here on the buy side. Now these orders are live as soon as you put them on your chart, so I tend to place them away and then pull them into where I want them to be. If you have well, this range is a little bit tight, so I'll engage a stop strategy after it fills. And you may want to do this as well. You may want to go into manual mode, especially if you're just running a single contract. We can turn the OCO off now. Every once in a while, and I'm not sure why, it's not a consistent little glitch. It's probably something I'm doing. But let's say it fills to the buy side. It's supposed to only cancel the sell order, but it will cancel both orders. So if you still want to, okay, it looks like we're going to fill on the short side. So if that happens, I want to be prepared that I can still enter just by pressing the sell button. Okay, that time it worked correctly. So now I'm going to get my stop strategy ready, and I should have probably done this before. And now I have my little OCO type bracket trade going on. So that's how you could do a little bracket trade there. Bracket trade's always difficult because, well, most breakouts fail. That's why we usually allow the market to break out, and then we'll look for that retest, right? So if this was our zone that we were looking at right through here, we look for the breakout, we look for the retest to see if the market can stay out. And then we look for an opportunity. Let me get that line out of the way so the market can head lower. Put a few more lines up here to keep prices down. There we go. These are all trading tricks that most people are not aware of. If you build yourself a little bit of a barricade right here, prices can't get through that. Oh, things getting dead quiet here. Are we waiting on a report? No, it's already past report time. Oh, looks like I gotta throw a few more obstacles up here. Oh, sorry, folks. Sitting on my microphone there. So just throwing a few more obstacles in the way there. I'm looking for another bearish bar here so I can perhaps roll my stops down. It does not look as though, well, at the moment, it does not look as though we're going to get the bearish follow through. In fact, it looks like we've built ourselves a nice little sideways trading range here. Oh, it looks like they're going to tag me out at the top end. All right, so let me clean this up. Well, there was a chance. I was surprised. I really didn't think it was going to even give me that much. Robert's asking, Eric, are you still using Ninja 7? Yes, absolutely. Robert, I am notoriously, I don't know if notoriously bad's the right way to phrase it, but I am not quick to update software. Why is that, you say? Well, you know, back in the day when programmers would release a program, they would actually try to debug it before they release it to the public. Not anymore. Now what they do is they get it working, they work out the major kinks, and then they leave it up to you to find the rest. Sounds like fun, doesn't it? No, not really. So to that end, I always stay with the most stable version. And Ninja 8 is fairly stable now. However, we have a serious software conflict between the trade manager and Ninja 8. Unfortunately for us, when they released Ninja 8, it wasn't just, you know, some tweaks on Ninja 7, which is what Ninja 7 was on Ninja 6.5. Ninja 8 was a complete rebuild from the ground up, and it threw a serious wrench into our software. Now, the good news is most of the software was an easy fix. The Raptor was a relatively easy fix. The DTS birds, an easy fix. But the trade manager, this baby right here, this is a very sophisticated piece of software, lots of moving parts. And to make matters worse, Ninja kept moving the target. So just when we think we're ready to reprogram for Ninja 8 and we start working on it, somebody reports a bug to Ninja and they redo something on Ninja 8 and throws us right back to square one. Now, I have been talking to the programmer, and I don't want to give anybody false hope because we've been here before only to have the whole thing domino and fall apart on us. But it looks like Ninja 8 is stable enough, and we may have a Ninja 8 trade manager available before the end of the summer. There, I said it. So hopefully this black cloud that's been Ninja 8 is finally moving away, and we will finally have Trade Manager Ninja 8 compatible. But like I said, I don't want to give anyone false hope. We've been we've been down this road before. I was probably the last person on the planet to upgrade from Ninja 6.5 to Ninja 7. And that's only because they forced me to. Here's a little fun fact, although they don't, one of the reasons I hate Windows 10 so much is they don't allow you to turn off your updates anymore. I'm still running Windows 7 on this machine, and one of the very first things I did was turn off the automatic updates. What? What about viruses and fixes and patches and all this kind of stuff? No. Those security upgrades that they send you, and I'm using air quotes to say security upgrades, are probably tracking software. It's probably some advertisement they're going to slip in. If you were running Windows 7 and you had your upgrades or your updates turned on, you probably received or still receive several prompts saying, hey, why don't you upgrade to Windows 10? But Microsoft caught on, and you can no longer disable your updates in Windows 10. So now when I work on my Windows 10 computer, right in the middle of working, it will force an update on me. Ask me how happy I am about that. Let me see. I pay a lot of money for my computer, and Microsoft tells me when I can and cannot use it, or how I can and cannot use it. What's wrong with that picture? Okay, I'll get off my soapbox now. I know I vent a little bit when I start talking about this sort of thing, but it's annoying. Yeah, Anthony says that's true. Apple does the same thing because they've caught on to how Google led the way, of course, but they've caught on to how valuable your private information really is. And we're not talking necessarily in a malicious way, but rather what your browsing habits are, what you like to shop for online, where you live, what you do. You know, this is all very valuable information to them. There are programs out there that will not track you online. Many of you may have already heard of DuckDuckGo. It's a search engine. And to be fair, it's good. Not quite as refined as Google, but if you're just looking to do a broad search on a subject, you know, like let's say Mayan Riviera vacation, if I could spell, Air Transat, which is a Canadian carrier, it will still get you to the correct website. Maybe I should book a vacation while I'm here. Yeah, I think you're right. Anthony says Facebook is the predecessor. They created that nonsense tracking crap, and it's global now. And you're absolutely correct. I regret. I use some nifty little software programs for cleaning out the registry and fixing my shortcuts and stuff like that. You know, just a quick little scrubbing program. and they never used to bother me with updates, and now they are all bugging me with updates, and I'm going to delete a lot of them. All right, so after my little rant, where are we at? So we had a little bit of a bullish break. Oh, note the nice little retest that we had here. So there's our little channel that we established. The market breaks out, retests, and then comes out again. This was actually an early number one signal, although it looks like we got a second retest and a proper number one signal printing. I'm still a little leery to get too bullish, though, because of the stronger downtrend that we saw out of the open. Market kind of tailing off here. And again, here's an instance where, is this number two signal counter trend, or is it actually with trend? I would consider that to be with trend. And this is probably not that bad of an opportunity, truth be told. If we get a little bit of a second push going on here, the second push again just means we allow the signal to engage. We see where the market flinches. Very often it will make a proper turn like this. Sometimes you'll just get the bar retreating a little bit like that. Well, for a couple of ticks extra, I can even enter below that little swing low. I can go a couple of swings back, and here I have a nice little with trend opportunity, maybe. If the sellers are going to recover it, they're going to have to do it soon. Otherwise, the market will continue to get a little bit more bullish. Given all this support down here, I think it might be prudent to take profit on target. Although if you have the luxury of running multiple contracts, you could probably leave a runner in as a challenge of the low of the day would seem to be in order. All right, I'm watching the Geiger counter here, trying to get a feel for whether the sellers are coming back or whether the buyers are going to kick them in the teeth. Oh, can't take it to break even now. I was going to try to sneak a break even in there. This whole region, kind of the top end of this trading range that was established. Okay, if I can get a bearish bar, I'm going to start squeezing this trade. I'm not liking the lack of follow through here. All right, let's bring the stops in. And I'll take the break even. There we go. Come on. Okay. That was hard work. Here's the extra orders coming through now, pushing the market lower, and we're going to get that challenge of the low of the morning that we were talking about. The low of the morning, the bottom end of the trading range. And the Geiger counter now. I was going to say a lot more bearish, but we're starting to even out here pretty quick. We're getting some buying coming back. So this is the kind of instance, if I were still short, watching the Geiger counter kind of rebound a little bit, I would probably get a little bit more aggressive with my stops at this point. All right, well, let's put that away for now. Anthony says, I'm getting a little bit more bullish. He says, my target was hit, 73.65. Now I'm looking 74.16. Wow, you're swinging for the fences. That is a very aggressive move. Would put us back into where the market was trading yesterday. It was in the high 74 tens, teens. to spend a little bit of time bouncing around here, I think. So far, this whole support zone keeps holding the market. This 73.64 quarter. Although look at this now, we're getting a late filter entry signal to short. I'll demo this for you because the late filter entry signal does tend to be such a reliable signal. So it occurs when the trend, the filter goes out of sync, comes back into sync. The trend line itself never changes color. This one's a little bit steeper than we normally see. Very often, the trend line will go fairly flat, which is what we're looking for. Now the trend line changing color, so that cancels that trade. And of course, the filter out of sync again. So let's put that away. A little bit of a conflict between the tools. Here the Hawk has got a macro pullback and a 4-arrow consolidation. The Eagle also bearish, and now the Raptor coming in with a cloud crossover signal. So again, this would be in sync with the larger trend that's going on. I don't think I'm going to get a second push opportunity on this. If it's going to go, it's probably going to go from right here. So if it's something you want to try, you're pretty much committed to get in wherever you can. And here we are now at the lows. And we'll see if they can do anything with that. right, they're gonna make a push here at the lows, or I think they are. When in doubt, stay with trend, right? All right, doesn't look like they're really ready to commit to it just yet. That quick little move, anytime you see the market make a quick little move, you should always be suspect because that tells you there's not a lot of traders trading at that level, and it could kind of be a fake break, which happens a lot of times. Okay, well, it looks like we've lost whatever momentum the market had, and we're just bouncing back and forth here for a bit as, well, I guess they figure out what they're going to do next. I don't know if we're going to see anything else here this morning. Like I said, we're in this slow sideways drift. When in doubt, sell. Because that is the trend, but it's really non-committed here at the moment. All right, gang. It doesn't look like they're going to do a whole heck of a lot here. Like I said, they just keep going back and forth. If you are going to continue trading today, I think this may be what we're looking at. We're going to look at a little bit more sideways trading going on. I wouldn't be surprised to see a little bit of a retest here of the 73.80 zone, but for the most part, I think sideways to down is going to be what we're looking at. All right, I will talk to you again tomorrow. We'll talk to you then. Bye for now.